Hey guys, good afternoon. It is 3 o'clock and we're going to do a quick market wrap. I didn't get the bounce back to the mean like I thought I would, but we stayed inside the ones. And so this is why I used the R-vol, H-vol. We got out of the H-vol ones, but it did not get past my R-vol one. And this is pretty much right where I thought the market was going to go, potentially. We put that in the market analysis report this morning. So let's see, 227. It actually the range expanded a little bit from this morning, but let's see, we were just under the three, so we were within the PT3 point range, but inside the ones. So we got a reprieve from the volatility. And it was very slow trading. And if you go back and listen to this morning's pre-market, my subscribers, I told everyone it was going to be a very boring day that's going to drive you crazy, but we all needed a rest from the volatility, and that's what we got. So we got a little bit of a late pop. And when the market goes back above the hedge line, this is the part where I was confused whether they're delta hedging the option contract, the additional, not the collar, but the additional option contract. Um, and so they may be delta hedging this, um, and then bring this back down, of course, my theory being before next Thursday, close of business. So I knew that we would be going up and down over this line, uh, but my theory will end, of course, if the market takes off next week. And that will pretty much tell me that they did not get that extra contract. But because of the fact that they sent it back down so quickly after the initial move, the depth of this initial flush, um, because of the suddenness of that flush, as far as not being able to delta hedge that with a high volatility, led me to the conclusion that they must have had a secondary option agreement. So it's just very complicated. It helps when the market stays above their designated boundaries. No doubt, because we don't know how to trade it. They certainly aren't giving us any forward guidance, to say, we had to get an extra hedge on our contract. So be aware that you might have some extra downside risk. We're protected, but just heads up, you might have to protect your portfolios even more. But so suffice it to say that the low volatility, indicates that the market would rise a little bit. So I was expecting the market to rally up a little bit, and we were spot on in our pre-market report this morning that hit your mailbox. So we got a win on the actual report. So that's good. And that's it, really. NQ, Russell, YM all stayed inside their daily ones. There was no deviating. Each one of these contracts stayed inside its daily ones. So, so that's very helpful to know. And as far as the market structure being just very flat. So I'm not sure why the ES decided to break out a little bit higher. Um, it may have had something to do with this bull bar on the break. When it did break, that led them into that delta hedging, meaning they were controlling it as much as possible not to allow it to continue going much higher, but they hedged it up to the next resistance area, which are these daily ones, and they flattened it out. So they did their job. They did allow the break to happen. So it would be better if they, I'm going to sound crazy now, but if they got with me, I could show them where these levels are on the higher time frame, quarterly, monthly levels, so that they could get their 5%, 20% um, better structured. But I guess that makes no sense. If they're going to have a big event risk like this, it wouldn't matter where they put their risk. It could always have a chance of breaking. All right. I'm just trying to think ahead 50 steps. Okay, so I hope y'all have a great weekend. I'll see you on Sunday night, and we'll get ready for the market next week. I'll try to get a weekly wrap up video done before Sunday to help you prepare for next week. Y'all have a great weekend. Thank you so much. Talk to you later.